Good morning, good evening, good whatever time it is you're listening to this. I hope you are having a good one. I'm going to be going over the datasets and the SPY for April 3rd, 2025. Now, granted, some of the data I'm going to show you in this video is going to be a little outdated because of what took place in the after hours today. However, just bear with me. We will be building a whole thesis and drawing out a plan. But with that said, let's go ahead into the datasets for tomorrow. Now, tomorrow's not a very big day for datasets. We only have the jobless claims and we have some ISM non-manufacturing data from the PMI, just some minor stuff. It's nothing that's going to affect the market tomorrow. We had some massive news with the Trump tariffs this afternoon, and here's just a list of some of them, and let's just quickly go over them. So China, 34% tariff. European Union, 20% tariff. Vietnam, 46%. Taiwan, 32%. Japan, 24%. Um, a lot of our allies right now are getting hit pretty dang hard with tariffs or tariffs, however you want to pronounce it. I don't really care. You know what I'm talking about. South Korea 25%, Thailand 36%, Switzerland 31%, Indonesia 32%, Malaysia 24%. The list goes on. Now, what happened really in the after hours today? Um, we had President Trump release his kind of plan and original or initial uh, tariff strategy. What he's going to be implementing essentially starting tomorrow. Um, Now, what happened in the after hours was we originally saw SPY moving up to the 570 mark, and we had the news come in that he was going to be doing a 10% blanket tariff, which the market took that as super good. That was super good news because 10% tariff meant it was far below than what everybody was expecting and what President Trump was talking about. Now, we know that's not the case. Um, After he started digging into his conversation a little more, um, it was that the 10% tariff is a blanket tariff. So any tariff we're going to be doing is going to be the baseline 10%, and it's going to be a retaliatory tariff to any tariffs implemented on us. So if someone has a 30% tariff on us, then we are going to uh, follow that with a 30% tariff on them as a retaliatory tariff. Tariff, however you want to say it, I don't really care. You know what I'm saying. Now, when the market actually started hearing that um, it was going to be more than just the 10%, we went from the 570 all the way to the 542. We actually saw SPY at one point negative 3% in the after hours, and I'm going to just say that 90% of traders, probably more than that, have never seen that type of action. I've personally never seen that for the SPY. This is a massive event. Uh, you can be sure that this isn't over, and we're gonna dig into that when I go over the moving averages and the Bollingers. But this is a very significant selling candle. We dropped essentially $28 within just a few minutes. So keep that in mind. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. Alright, so going over the daily chart, and as always, we are going to discuss the moving averages and the Bollingers. Now, the only moving average that matters right now is the 5 mile because we are very below all the other moving averages right now. Um, they are so far out of range, it's not even worth talking about them. What is important is that and by we I mean the market, we heavily rejected the 200 mile a few days ago, and we saw the market come up and test this level very well, and then it was actually up in this area. Um, it rejected very hard, and we saw this inverse cup be filled right here. Let's just highlight this really quick. But we saw this inverse cup right here fill downward. Um, and just a reminder, we do have this larger inverse cup that has been building, and I've been alluding to it for quite a while now that there's this massive gap at the 536 that the market is very likely trying to head towards. Now, with that said, uh, the moving averages and the Bollingers. So the 5 mile is currently at 561.52. This doesn't really matter too much right now because it's going to pull down like massively, assuming we even hold a little bit of this sell-off during the overnight session and during the open. We're very likely going to be seeing the 5 mile pulling down, probably in the 557, 556 range, give or take. Um, just it's very important that when the market opens, you do mark that level down. That's going to be a very, very key level, okay? Uh, but if we didn't have this massive sell-off going on, it would be opening around the 563. But that 563 level really doesn't matter right now because in the overnight session, we're down over 2%, almost 3% right now. So just be aware of that. The other level that really is key right here is this bottom Bollinger because we're actually sitting in it right now. The lower Bollinger is at 549.62 and currently the overnight price is at 548.88. So um, we're definitely opening in that lower Bollinger and we're in that range right now. Okay, so that's what's really important about the moving averages in the 5 mile currently. Now, looking at structure, and this is going to look ugly for a second, but just bear with me. And excuse me, these two liquidity channels basically highlight two different things. And I just want to pull up the daily chart. And yes, you could see the large cup from the other day. It's playing out really well, by the way. Now, so we have these two liquidity zones, and this yellow really does pull down towards this orange channel, so I'm just going to pull it down there anyway. So the expectation should be that it's going to go down there. Now, this liquidity channel is essentially from when President Trump was elected, and it started right there. This was a breakout of, the major selling channel, this blue channel that we have. And we've been holding tight to this major blue channel for, essentially since November. And even though we've been rallying through this, this has been a selling structure, as you can see with this large inverse cup here. It is selling downward, and we're nearing this orange channel very closely. As you can see, just in the over hours or in the overnight session, we were pulling $8 away from that. So with seeing how we've been getting, $10, $15 moves over each session the last what, 3, 4 weeks now, we should be anticipating that this bottom of this channel is going to be hit pretty soon, if not within the next few days. So we also had this inverse cup here that built a handle, and with that handle, it's pulling us downward. Okay, that's generally what inverse cups do. They create the liquidity to continue pushing down. Now, with that said, with the bottom Bollinger being at the 549.62 and where we're at right now, 549.60. So we're very well within that bottom Bollinger range, and assuming we're gonna open very close to this range, that means that we're starting that bottom Bollinger move. Now, just to kind of highlight this, bottom Bollinger moves generally follow a pretty standard pattern, and it's going to be hard to how do I say this? This previous correction we had kind of broke that pattern of what's standard during a bottom Bollinger move. However, I'm still going to suggest to trade this as a standard bottom Bollinger move because that's just how bottom Bollinger moves should be traded regardless. Even in this correction, um, it would still be correct to trade it this way. So what generally happens during a bottom or a lower Bollinger move is the market will pull to or below the level. Now, for that first session, you're going to see usually the Bollinger held, and that means it's going to close at or below the level. Um, on the second session, you're usually going to see a lower low. So, for example, say tomorrow we get to say 5:45, right? And we close there. The next day would technically be that day two at the bottom Bollinger, which would suggest we're going to get a lower low. So if we got 5:45 yesterday, then today would be that 5:40 roughly, give or take, and that's kind of just the mindset behind it. Um, we know this is a true pattern. Just looking at besides this correction right here, and besides like the COVID sell-off, this is a standard pattern right there. I showed some back there, right there. On the second day, the market will start pulling back upward to retest the 5 mile. Okay, so as right here, you can see pulls down, tests the 5 mile, pulls down, tests the 5 mile. Right here again, pulls down, tests the 5 mile, pulls down, tests the 5 mile. Right here, pulls down, tests the 5 mile. So it's a very historical trend. Again, pulls down, tests the 5 mile, pulls down, tests the 5 mile. So the expectation and anticipation should be is that we are going to pull down and test the 5 mile. Um, that's kind of the thesis over the next few days is that we should be anticipating lower lows. The sell-off is not just a fair value gap type sell-off. This is a very, very real candle. I mean, look at the price there. We almost went from 571 to 542 in the span of not even an hour's time. That's a $29 move on the SPY. That's not normal. I can I can say pretty much every single trader that's going to watch this video or who has been trading within the last, 10 something years has not seen this type of sell-off in the after hours. So this is new for many of us, and with that said, we're going to be seeing a lot of this over the next few days as the markets price in these tariffs. And I'm highly, like heavily suggesting against trying to catch calls on this until Friday. Friday would be that day two of the bottom Bollinger, and generally when you could start to look for support, because after that day two is generally when the market starts to head upward to test the 5 mile again, whether it's to test it as a resistance to reject it again and head downward, or to test it as heading up and continuing to push above that level. Now, that should still remain the same here, whether we continue pushing downward or not. Uh, Again, that's a very historically accurate trend, is that we will test the level and um or we will why is that doing that? We'll push downward basically two other sessions and then come test support again. And unless you're scalping, there's how do I say it this way? There's really zero room to be taking any sort of calls in here right now until we hit this bottom channel. Um, this after hours or this overnight and after hours selling is giving us a very clear signal that this level right here is going to be hit. Um, this is not even about predicting. This is not even about guessing. This is the market is heading towards this level. Um, so it's very safe to take puts on the open. Even if we head upward, you should still be kind of taking puts right now to target this level. This level is definitely where they're trying to go. Now, whether they bounce upward from this level, that's a totally other story. But it's very likely we will see some sort of bounce off of either this orange 536 gap that I've been mentioning for, a few weeks now, or the bottom of this selling channel. It's very likely we test the bottom of that range, and then wherever the 5 mile is going to be, which I said it's probably going to be opening around the 557 tomorrow, so that puts it right there. over the next 2 days, that'd probably put it probably close to that 550, 551 range. Okay, so it looks like they're trying to target kind of that liquidity that's built. And very likely it's going to head up right there. Now, besides my random thoughts, what we should be looking for here is essentially going to look like this. It's going to pull downward, right? And from here, we're looking for movement back up to that 5 mile level. Okay, now from that 5 mile level, it's going to be really important to kind of see if we head upward and start filling some of these upward gaps, which I don't think we will be, or if we're going to build kind of an inverse cup and retest that bottom gap area. I'm sorry if you can hear my daughter screaming right now. She's singing. Um, but that's kind of the premise of the next few sessions. Okay, is that um, we really need to be patient. We need to allow this gap to really be taken. And knowing how these liquidity channels work, generally you go from either the bottom to the top or the top of the bottom. We're very likely heading towards the bottom of this liquidity gap. And if we're going to be testing anything, potentially we can be testing all the way back up to the top of it. Okay? Um, that's really what you need to be looking for right now is how we move in the lower Bollinger over the next few days, what we do with the 5 mile, so whether we reject that level or use it as a support and build on top of it, and that's really going to be the key of where we move next. Because after the 5 mile move gets retested, then it's usually choosing between the 20 mile or the bottom Bollinger again. So with the 20 mile being at the 563 right now, that will pull down slightly over the next few days, but that opens up that move of whether it's going to test the area or, continue pushing downward. And we have plenty of room to push downward too. Don't think that we don't. After this 536 gap, we have a 508 gap or a 507 gap, I mean. And you can see that right there. That's a massive major gap. That's a massive major gap. Uh, both of these can be hit very reasonably. And once this large inverse cup fills out, which currently it is very close. It's we got to right here in the after hours today, at the very top of that little circle right there. So we're essentially closing that cup very very soon here. From that cup closing, we should be anticipating some sort of handle, which generally you want the handle to build upward to create liquidity to push back downward and you know, then force us through that level, force us through the bottom of or the top of that cup and have the breakout down to that 507. Anyway, I'm gonna go ahead and end the video here, because I just haven't been feeling good the last few days and I've just been absolutely exhausted. But I know that I couldn't not make a video today when we had probably one of the most significant sell-offs we've had in I don't even know what to compare this to. I mean, 2008. I don't really even know what to compare this to. This is a massive sell-off for the after hours. So with that said, everybody just make sure you trade safe. Don't be trying to chase this with calls yet. I promise you, you're gonna waste your money if you do. Okay. Don't take that as like stupid guru advice or anything. Take that as like you will waste your money if you try to chase this with calls. Okay, you have to at least wait until Friday. If you don't wait until Friday, you're going to lose money. That's 99.999%. Okay, I can almost guarantee you will lose money if you try to take calls within the next 2 days. Taking calls on Friday, however, that are dated out will be extremely, extremely good. Or taking calls at the bottom of that gap, that 536 gap, will be extremely, extremely good. And the reason why is because the liquidity has to head back upward to build the move back downward. So yeah. With that said, trade safe, everybody. I hope you all have a good day. If you're panicking about the prices being down on things, because I know that many people follow me who have, pretty big savings accounts and everything, or retirement accounts and everything built up. Don't stress about this. Okay, this sell-off is nothing to stress about. Um, it might seem large in the grand scheme right now, but in a year's time, we will be reclaiming this level and pushing above it. 1 to 2 years time maximum. Okay, this isn't gonna be like the dot-com bubble where it popped and people never saw returns on those investments again. That's not how the S&P works. Um, there will always be weight pushed back into it. There will always be weight pushed back into tech, and we do have earnings coming up in a few weeks again. So don't count everything out for now. Don't assume that we're just going to continue selling off and never see, these levels again. That's not how the market works. Perfect example. Market loves to go up. That's what it's built for. So, if you are holding equities, don't panic. Don't panic sell. No reason to do that. Just keep holding. And it's actually a really good time to slowly be taking longs in some of these positions too. Even if it's small positions, right? Um, this is one of those type of dip buys that you buy. Um, yeah, I'll stop rambling. Have a good day, everybody, and I will talk to you in the next video because yeah, the next video is going to be really important. We will be kind of saying if this is going to be something massive or not. But yeah, have a good day.